On Monday, mainly driven by the sharp drop in the US dollar, spot gold prices surged $91.82 or 1.85% to close at $5,058.02, returning above the key $5,000 mark. The main driver of gold prices was the trend of the US dollar. Market expectations for weak US economic data, especially employment data, have become increasingly stronger. Investors are preparing to welcome a series of economic data this week to analyze the outlook for Federal Reserve policy. On Monday, the US dollar index hit a more than 1-week low, plummeting 0.84% to 96.86, as traders waited for the release of several key US economic data, including retail sales, inflation data, and the highly watched non-farm payroll report. The US dollar started the new week weakly. In addition, US job market data last week was unexpectedly weak, and the market is preparing to respond to the possibility that the Federal Reserve may reassess its views on the job market. This made gold priced in US dollars more attractive to overseas buyers. Furthermore, affected by reports that China has advised institutions to reduce their exposure to or cut holdings of U.S. Treasury bonds, the U.S. dollar weakened on Monday, which stimulated a sharp rise in gold prices. Another factor is that the People's Bank of China (PBOC) has increased its gold reserves for the 15th consecutive month in January, as more and more central banks diversify their U.S. dollar reserves into other assets. The depreciation trade continues. Other positive factors, such as market expectations that the Federal Reserve will further cut interest rates, might put pressure on the US dollar. The January non-farm payroll report and the revised employment data to be released this week are crucial for determining the direction of interest rates. Investors are closely monitoring the US non-farm payroll report, Consumer Price Index (CPI), and initial jobless claims to be released on Wednesday. All content is for reference only and does not constitute any investment advice. If you trade based on this content, you should bear your own profits and losses. Please subscribe, like, and share. Thank you for watching.